Here is a review that you need. Tax write-off number 1, business meals. As a small business, you can deduct 50% of food and drink purchases that qualify. To qualify, the meal needs to be related to your business, and you need to keep the following documentation related to the meal. This is really important. You got to keep records, the proper records. So you got to have the date and location of the meal, the business relationship of the person or people you dine with, the total cost of the meal. And the easiest way to track business meal expenses is to keep your receipt and jot down notes on the back of on the back about the details of the meal. And you can even archive those receipts. Number 2, you have work-related travel expenses. So all expenses related to business travel can be written off at tax time, including airfare, hotels, rental car expenses, tips, dry cleaning, meals, and more. And you can reference the IRS website for a full list of deductible expenses, business travel expenses. To qualify as work-related travel, your trip must meet the 3 following conditions. The trip must be necessary to your business. The trip must take you away from your tax home, that is the city or area in which your company conducts its business. And you must be traveling away from your tax home for longer than a normal workday, and it must require you to sleep or rest en route. Number 3, you have work-related car use. If you use your car strictly for work-related purposes, you can write off all costs associated with operating and maintaining the car. If your car use is mixed between personal and business reasons, you can only deduct costs that are related to the business usage of the vehicle. And you can claim the mileage you use for business driving either by deducting the actual miles traveled for business or by using the standard mileage deduction of 58 cents per mile driven. Number 4, you have business insurance. You can deduct the cost of your business insurance on your tax return. And the thing is, if you have a home office or use a portion of your home to run your business, you can deduct your renter's insurance cost as part of your home office write-offs. Number 5, you have home office expenses. Under the new simplified IRS guidelines for home office expenses, home-based small businesses and freelancers can deduct $5 per square foot of your home that's used for business purposes up to a maximum of 300 square feet. To qualify as a tax deduction, your work area has to be used exclusively for the business. That is, you cannot write off the square footage of your dining room, for example, if you do your work at the table during the day, and you need to use the home office regularly as your principal place for conducting business. Number 6, office supplies. By the way, welcome back to the channel. We really appreciate having you. We're having a conversation today about business tax write-offs your business can claim very easily. So we're talking about office supplies. So you can write off office supplies including printers, papers, pens, computers, and work-related software as long as you use them for business purposes within the year in which they were purchased. You can also deduct work-related postage and shipping costs. Be sure though, you need to file all receipts for office supply purchases for documentation. 7, we have a phone and internet expenses. So if using the phone and internet is vital to running your business, you can deduct these expenses. If, however, you use the phone and internet for a mix of work and personal reasons, you can only write off the percentage of their cost that goes towards your business use. For example, if roughly half of your internet usage is business related, you can write off 50% of your internet expenses for the year. Number 8, we have business interest and bank fees. If you borrow money to fund your business activities, the bank will charge you interest on the loan. Come tax season, you can deduct, not a problem. You can deduct the interest charged both on business loans and business credit cards for that matter. You can also write off any fees and additional charges on your business bank account and credit card, such as monthly service fees and any annual credit card fees. Number 9, we have depreciation. So when you deduct depreciation, you're writing off the cost of a big ticket item like a car or machinery over the useful lifetime of that item, instead of deducting it all in one go for a single tax year. And businesses usually deduct depreciation for long-term business investments that are more costly, so they are reimbursed for the expense over the entire useful lifetime of the item. And so this is really good. So if you want to calculate depreciation, it basically is equal to the total cost of the asset divided by the useful lifetime of the assets. 10, we have professional service fees. Any professional service fees that are necessary to the functioning of your business, such as legal, accounting, and bookkeeping services, are deductible for tax purposes. If you use accounting or bookkeeping software for your business, that would also qualify as a tax deduction. If you're having trouble determining whether a particular professional service expense is for work or personal use, go back to the IRS website. They do have guidelines to sort of let you know whether or not the service qualifies for business or personal. (11) We have salaries and benefits. By the way, I want to quickly remind everybody of today's topic. We're having a conversation about the top 25 tax write-offs your business can claim. Salaries and benefits. So if you are a small business owner with employees, you can write off their salaries, benefits, and even vacation pay on your tax return. And there are a few requirements for writing off salary and benefit expenses. So the employee is not a sole proprietor, partner, or LLC member in the business. The salary is reasonable and necessary. The services are delegated to the employee where provided. 12. We have charitable donations. You can deduct charitable donations that you make to qualifying organizations. If your business is set up as a sole proprietorship, LLC, or partnership, you can claim those expenses on your personal tax forms. If your company is a corporation, you can claim charitable donations on your corporate tax return. 13. We have education. Any educational expenses you incur to bring value to your business are fully deductible for tax purposes. The requirements for education-related expenses are that the course or workshop must improve your skills, or help maintain your professional expertise. Educational expenses that qualify for deductions include courses and classes related to your field of work, seminars and webinars, trade publication subscriptions, books related to your industry. 14. We have child and dependent care. Costs you incur for caring for children or adult dependents is a tax-deductible expense. If your own children are 12 years old or younger, you can write off costs associated with their care. Adult dependents also qualify for deductions, including spouses and some other related adults who are unable to care for themselves because of physical or mental disability. 15. We have energy efficiency expenses. So if you make upgrades to your home or office to ensure it's more energy efficient, those can qualify for tax credits. You can claim 30% of the cost of alternative energy equipment for your home, including solar panels, solar water heaters, and wind turbines. And the IRS actually has a more detailed information about everything about home energy tax credits. 16. We have investments. So if you borrow money to make investments, you can write off the interest paid on the loan. You can deduct the interest up to the point that it matches what you earn in investment income. And this applies also for business lines of credit or business loans in general. 17. We have a foreign earned income exclusion. So American citizens with businesses based abroad can, under certain circumstances, leave the foreign income they have earned off the tax return. To qualify for the exclusion, your tax home must be based abroad. So this is really important. 18. We have medical expenses. So you can claim both insurance premiums and medical care expenses, including doctor's fees, prescription drugs, and home care. And if you are self-employed and pay for your own health insurance, then you can deduct your health and dental care insurance premiums. But please make sure that you always keep the records, because the IRS is very adamant at making sure that taxpayers comply with medical expenses deductions. So it's very important not to actually file anything frivolous. You always want to back up your claims. 19. We have real estate taxes. So real estate taxes paid at the state and local levels can be deducted on your income taxes at the federal level. So property taxes are included in those deductions, and you can claim up to a total of $10,000. Okay, and this is actually something that is really cool, because this can reduce your overall tax liability, not only at the business level but also at the personal level. 20. We have mortgage interest. So you can deduct interest payments made toward mortgage loans to buy construct or improve your home if you use your home for business purposes. If you take out loans against your home equity, you can also deduct the interest on those loans. But again, remember that there has to be a direct association to your business. Okay. I mean, if there is no association, then you cannot, there are certain limitations on what you can deduct for your personal, on your personal tax returns. Because in today's conversation, we're talking about business deductions, business tax write-off. So there always has to be a direct nexus to your business. One thing I also want to say here is that, again, I think I said this before. We want to really emphasize record keeping, thorough record keeping. #21, we have moving expenses. I want to quickly remind everybody again about today's topic. We're having a conversation about the top 25 business tax write-offs your business can claim. Okay, 21, we have moving expenses. So if you move and the main reason for doing so is work related, you might be able to fully deduct the cost associated with the move. To qualify, your move has to pass the distance test. So the IRS has a distance test. So that to pass the distance test, your new job location has to be at least 50 miles farther from your home, from your former home, than your old job location was from your previous home. Let me repeat that. To pass the distance test, your new job location has to be at least 50 miles farther from your former home than your old job location was from your previous home. 22, we have retirement contributions. So if you contribute to an individual retirement account, IRA, doing so helps reduce your taxable income for the year. Your total IRA contributions cannot exceed the total income you earned that year, or it cannot exceed the annual maximum contribution, whichever one is less. 23, we have advertising and promotion. So you can fully deduct expenses relating to promoting your business, including digital and print advertising, website design and maintenance, and the cost of printing business cards. Okay, so everything. So don't forget those online ads, those Facebook ads, those Google ads, those YouTube ads. They are fully deductible. 24, we have client and employee entertainment. So if you take business clients out, you can actually deduct the expenses as long as you discuss business during the meeting and the entertainment takes place in a business setting for business purposes. Okay, so you have a constellation of criteria that have to be met for the IRS to approve those to approve that expense. And you can also deduct as much as 100% of the cost of social events held for your employees. But for the entertainment expense, you can only deduct 50%. 25, we have we have startup expenses. So if you launch a new business venture in the latest tax year, you can deduct as much as $5,000 in startup expenses you incurred in the lead up to your business launch. That can include costs associated with marketing your new business, travel, and training costs. So those are startup costs. You can deduct them, not a problem. Let me give you an overview here because I think it's great to have all the 25 business tax write-offs, but we really need to have a clear idea about what we are talking about. Okay, so what can you really write off? So here are the common tax deductions for small businesses. The thing is that if you want to have a more exhaustive list of all the tax deductions, you want to read a very comprehensive material called IRS Publication 535. This material provides comprehensive guidance on which business expenses can be written off. So the thing is, if you have, let's say, you have an expense that does not fit into a general category, or you're not really sure if this applies or not, it's always better to actually contact the IRS, or you can do research. Okay, do research to see if the cost may be deductible for tax purposes. You can also actually talk to a tax attorney, an enrolled agent, or a CPA, or somebody who really understands the whole problems of your industry. Okay, and one thing I want to say here is that what is really a business write-off, a tax write-off? Well, a tax write-off refers to any business deduction allowed by the IRS for the purpose of lowering taxable income. So to qualify for a write-off, the IRS uses the term ordinary and necessary. Those are two terms that are really critical. So this is an expense must be regarded as necessary and appropriate to the operation of your type of business. And generally, tax write-offs fit into specific reporting categories such as business travel, advertising, or home office expense. Okay, so those are really important. And one thing I want to say here is that you need to pay attention to actually record keeping. This is critical. And so when we talk about tax credits versus tax write-off, tax deduction versus tax write-off, all of these things are in some way, shape, or form reducing your tax liability. This is why you have to be very careful and very thorough when claiming them, and make sure that you always have the proper substantiation to back them up. Really important. And one thing I also want to say here is that when you talk about credits actually don't have the same effect as deductions, because credits actually lower your tax bill dollar for dollar. Okay, this is important to remember. Whereas your tax deductions will only lower your adjusted gross income. Okay, so this is really important. So even though those two terms are used interchangeably, there is a slight difference. Let me close to this conversation by actually emphasizing that some deductions for small businesses are not tax deductible. So this is really important to actually, I want to emphasize that, because people sometimes get it wrong. And so certain legal costs, fines, or penalties are not deductible. So legal costs for defending yourself when you have broken a law are not deductible. Any fines or penalties assessed by the government are also not deductible expenses. Mileage related to one's normal commute. So an individual's normal daily commute is not considered a deductible expense. And any transportation cost, including the standard mileage deduction, cannot be written off for travel to or from work each day. However, business travel outside of one's normal commute is generally deductible, okay? And personal expenses and activities are not deductible, and political contributions are not deductible. Now, contributions to support political candidates cannot be written off for tax purposes. And so it's really important that you really understand that. And the bottom line here is what? The bottom line is you have to be pretty clear about what really can qualify and what doesn't. And I want to close to this conversation to say that in some cases, you might have to either receive or issue Form 1099 to folks you are working with, independent contractors, self-employed, or if you are the one providing the service, you got to be ready to receive a Form 1099. And so there are three forms when we talk about 1099 as it relates to the. I mean, actually, there are more than three forms, but I want to talk about the two that really matters to us here. So you have 1099 MIS and 1099 NEC. For non-employee compensation. In some cases, you might also have 1099K. If you receive, you are a gig worker and you receive some transactional statement from a payment processor like PayPal or Fiverr or whatnot. So just be aware of those distinctive 1099. So this is really important. And one thing I want to say before closing to this conversation, please, all the business tax write-offs that I spoke about, you can write them off, but I want to emphasize, have the proper documentation to back everything up. Whatever you claim, make sure that you are able to back it up. Thank you so much for your attention. I really appreciate it. In today's conversation, I just spoke to you about the top 25 business tax write-offs. And I hope that it added value to you and that it will help you reduce your taxes. And thank you so much for your attention. I'll see you next time. But until then, remember, stay marvelous.